Alright then, good afternoon everyone as we look ahead to another week on Monday the 29th of April. We'll flick across the calendar on what looks like a relatively busy calendar. That kind of always is the case when you get a bunch of European data out. Obviously you get Eurozone inflation, Eurozone GDP, but then that just comes in line with all the respective nations. You see France, you see Germany, you see Italy, and then obviously Germany again today. So maybe on looking at it, it probably looks like a slightly busier week than it is in terms of Europe, but certainly is when it comes to the US. But we'll touch on the US in a minute. To start the week, Monday, inflation out of Germany, German CPI, actual 2.2 in line with previous, below consensus of 2.3. So another print in line with the central bank's mandate of inflation between 2 and 3%. Certainly doesn't really make for much of a need for any hawkishness from the ECB. And again, looking at the rest of the data for this week, if barring any crazy surprises in French data, so German GDP, Italian inflation will get as well, and GDP, and then Eurozone GDP and inflation, bar any sort of crazy spikes, which is certainly not to be expected. The fact that we missed consensus on Germany today, barring any crazy spikes, kind of puts the next meeting at the beginning of June from ECB, a pretty guaranteed interest rate cut from them, you would say. Slightly different though when it comes around to the Fed on Wednesday. The Fed talk is still in the market whether we do get any cuts over the course of the rest of the year. I think it was an interesting print last week, which maybe makes Wednesday slightly unpredictable. But you look back to Thursday of last week, GDP figures from the US, massive miss on consensus. Pretty bad print when it comes to growth, but core PCE, the quarterly figures for PCE came out pretty strong. So that's an economy struggling for growth plus higher levels of inflation. It's not really great, is it? Not a situation that the central bank want to be in. They do call it stagflation, but not a situation the central bank wants to be in. And then what do they do then going forward? Market pricing for interest rate cuts has gone from 7 last year down to 1, potentially 2 now, or 2, potentially 1, we'll call it now. So obviously a massive withdrawal of bets for interest rate cuts over the course of this year. It sent stocks lower, although stocks did have a bounce back, which shows the importance of the companies in the US. You look back to the charts. We have a quick look back last week. Come across the equity markets. I mean, this was obviously the downside, as you can see in through here, from the GDP figures, from the inflation figures. Obviously, the fact that we're not getting any cuts was kind of reflected in this move down here. But bit of a move down last week off the back of those prints on Thursday, but then a spike straight back higher due to the fact that Microsoft and Google came out with pretty positive earnings. So I'm not sure really where stocks end the week. I mean, you got the Fed coming out on Wednesday. The Fed kind of have to confirm that they've pushed back on interest rate cuts. We're not getting any economic projections. We're just getting the rate decision, which is no change to interest rates at all. And obviously get the press conference from the Fed. No, you're not getting any interest rate cut, but they're going to have to back. That the previous meeting, at the last meeting, they did suggest that 3 cuts were still on the cards. They're going to have to confirm that those 3 cuts are not on the cards. Do they say we're data dependent going forward? We haven't made a decision. We're going to wait for the incoming economic data. It would kind of be a bit out of a sit on the fence meeting, which would kind of goes in line with Jerome Powell, or how he kind of acts. And then on the flip side, they have inflation is rallying, inflation is rising. I know you got PCE last week, it came in 0.3% in line consensus, but over the first quarter, inflation is still higher, commodities are still at high prices, and many of them continue to trend higher. So, or continue to want to trend higher. So again, that's upwards pressure on inflation. If you get earnings being positive again, that is again positive for business conditions, which will probably be positive for stocks due to the weightings of some of these big companies. But then the Fed probably they can't really afford to sort of continue on this dovish path and risk sparking some further inflation or more further inflation. So a bit of a tricky one when it comes around to the Fed. And that brings us on to kind of Thursday. If you have a look at this across here, you got Apple after the close on Thursday. this week. You got Amazon Tuesday, Amazon tomorrow, Apple Thursday. They got big weightings across the index. The S&P, Amazon's got 4%, Apple's got 5.5%, on the Nasdaq Apple's got 10%, Amazon's got nearly 8%. So they got massive weightings towards these stock indexes. And personally, I'm not really a trader of individual equities. It's kind of not where my skill set lies, but you got enough on your plate trading stock indexes, currencies, commodities and stuff, so it's difficult to trade these individual stocks, but still got to be aware of these big companies when earnings come around, as they can influence or do influence the price of the stock index. As you saw yesterday, or last week should I say, the market said, I don't really care about the economic data that made us sell off over the last day or two. We got positive earnings across these big companies, stock indexes are higher. So in terms of the US dollar, though, again, it's maybe a bit trickier in the US dollar. I would have said, had asked me yesterday evening, what do I think? I would have said, dollar's positive due to the fact that the Fed are likely going to have to push back on interest rate cuts, note higher levels of inflation, and probably speak a bit about that. Apart from, then you look at this dollar yen chart, and what do you do with that dollar yen chart? Off 600 pips in the overnight session. Pretty clear that is intervention from the Bank of Japan, but the market really tested the Bank of Japan's resolve on Friday. You can see it was up 300 odd pips from the low, got up to 160, and intervention was at 160 in the overnight session, down towards 154.50. It came from 160.20 down to 154.50. And nearly 600 pips, 570 pips lower, nearly in the space of an hour on this big candlestick, but over a number of candles. But you said that's intervention. What do you think? What do you think of that intervention, though? Look up above 160, down below 155, but that's still not even true Friday's lows, right? They're talking about intervention because they want to avoid all of this, but if you look at it, if you get on a daily candlestick and sort of zoom out, it doesn't really look like anything major, which is insane due to the fact that it's down 600 pips from the high. But markets rallying again. Like, ultimately, they can intervene all they want, but ultimately the reasons why dollar yen has been so strong and then the Japanese yen is so weak, that doesn't change. Yields still are where they are, interest rates are still where they are. You still got the US economy, which outperforms the Japanese economy, and that continues to put upside pressure on dollar yen, which is downside pressure on the Japanese yen. And it's kind of it's a bit of a situation where, like, what happens when there's blood in the ocean, the sharks kind of circle. Is there a chance dollar yen pushes back up higher, back to 160 to test the Bank of Japan's resolve? I wouldn't back against it personally. Ultimately the reasons for this to be bullish are still in place. I'd imagine the central bank come in and backtrack on any interest rate cuts, which again would be further positive from dollar yen. So I'm not sure off the top of my head how much they actually went in and sold the Bank of Japan or the Japanese government, but you can imagine it was quite a lot, as that sort of a move in a currency pair as liquid as dollar yen does not happen without significant funds being pumped into it. So if that then does come back up at 160, that would be an interesting few days ahead. So we'll keep an eye on that. Probably, unless you're going to go long back up into it, I'd probably try and avoid it. But if that does then continue lower, it's likely to put a bit of broad-based weakness into the US dollar, you would imagine. But yields coming off the highs, 2-year yields struggling to break 5%. 10-year yield had a bit of a pullback. It does just look like a bit of a pullback for now. 2-year yield still pinned at the highs, so not too much to see here for now. That is still relatively supportive for the US dollar. Gold and oil a bit sideways, oil kind of grinding higher, but I think main focus has to be the US dollar and equities over the course of this week. Then again, we can't really make much of a prediction as to what will happen with Amazon, can't make much of a prediction as to what will happen with Apple. They're outside market hours, so we'll have to wait and see what they have to say for themselves. And then you got the Fed on Wednesday. Brings us into then non-farm payrolls on Friday. Consensus a bit lower than previous month. Unemployment rate not likely to change. Again, strong labour market if we do get that on Friday. Kind of reduces the need for any further reduces the need for further cuts from the Fed. But I'm not going to speak too much about non-farm payrolls now, as we'll await to see what the Fed have to say for themselves on Wednesday to then make a decision as to what we will kind of look out for on Friday. So So a fair bit to get through before Friday, so we'll park that idea until we get to it. But that's kind of what's going on in markets at the moment. What are the options then over the course of this week? Like, if you get US dollar strength, right? Get US dollar strength. I'd probably predict US dollar strength. Like, is there a massive amount of upside left in it from a hawkish Fed? Probably not, but I do still think the bias is tilted higher on the US dollar. Then what do you go to look at to try and trade? I do think euro dollar shorts might be a decent bet, with them going to cut interest rates in June and probably multiple times through the year end. That does create a divergence in monetary policy between the ECB and the Fed, so that would make sense for euro downside. Dollar Swiss upside, again, Swiss National Bank are the first to cut interest rates. Yields in the Switzerland are a lot lower than that of the US and a number of the other countries. So dollar Swiss upside, euro dollar downside, maybe worth a look. Dollar CAD upside, especially if oil grinding higher, but if that decides to go back in line with this move lower and does take a turn lower, with the Bank of Canada suggesting that they are going to cut interest rates in June, or are looking at cutting interest rates in June, dollar CAD might not be bad for upside. In terms of US dollar weakness off the back of some sort of reaction to earnings. Maybe earnings is a bit of a tricky one, but in terms of a sort of a dovish reaction to the Fed on Wednesday, I would look towards the Australian dollar. The Australian dollar, there's no interest rate cuts priced in for this year for Australia. The market is expecting a continuous hawkish central bank and no cuts, if any, over the course of this year. So continued higher levels of inflation in Australia go in line with that over the course of last week, and upside in the Australian dollar. If the US dollar sells off, that would hopefully then spark a rally in equities as well, so that would be a kind of double whammy for the Australian dollar. But you got a few options. Long dollars, I think, if you're going short dollars, Australian dollar, I think, is the option. These yields will then be important, right? If you can get above 5% in yield, it should be sustained upside in the US dollar. These start to pull back a bit, like they have done over the course of today, likely to cause a bit of weakness and a bit of support for equity markets. But can't really make too much of a prediction on equities for now. Let's wait and see how Amazon's earnings come out on Tuesday. But that's the kind of thoughts ahead for the week. Important week going forward. We'll have much more of a clear picture as to how to attack the coming weeks ahead when we get to the end of this week. I kind of don't like sitting there too much and being like, oh, could do this, could do that on this session, but I think it is one of those weeks, to be perfectly honest. So let's see how it pans out. We'll update further as we get into it throughout the rest of the week. But best of luck with your trading week, and I'll speak to you again soon.